Welcome to Taking Stock, your weekend dose of all that transpired on Dalal Street and the cues that you need to watch out for as we head into next week. I'm Sonia and with me is Anuj as always. Hi Anuj, it's been quite a volatile week for the market and the ending was not great. In fact, quite a bit of a sell-off is what we saw in Friday, and by the end of it you get a feeling that the texture of this market has now changed a little from a buy on dips to a sell on rally.
Indeed, Sonia, I think it was a disappointing week. Even though in between you had 2 days when the market rallied quite a bit. But the start of the series is telling you that maybe the market is in for a bit of a correction. In any case, the Sensex and Nifty are not telling you the correct picture because, you know, by the end of the week, individual portfolios would have been down about 7 to 8%. If you take a look at some of the, trader favorite names and some of the high beta names, for example, Alok Industries was down 10%, GMR was down 10%, Indiabulls Real Estate was down 8%. So a lot of these non-index stocks are losing quite a bit of ground, and it's not that some of these stocks had big rallies before that. So mid caps have entered tricky zone. I think this is where the problem is. A lot of people believe that some of these stocks may be a bit of a trap right now. You may want to buy them because these stocks have fallen 10-20%, but next week they fall another 5 to 10%. So that's the problem point for the market. For the Nifty, we are close to support mark of 7450 to 7500, but really we'll be dancing to the global tunes now because it's really all reactive to what's happening with dollar, what's happening with Dow, what's happening with the volatility index, and all that makes you believe that this really is the corrective phase that everyone was anticipating. We just didn't know when the time would come for that.
Indeed, second straight week that this market has closed in the red. In fact, it is global cues that have weighed on our markets, whether it is the Russia-Ukraine issue, whether it is the US launching airstrikes in Iraq. All of that really put pressure on our markets this week. But let's get to guests now on the show to detail what took place and also to tell you how to approach next week. Manish Sonthalia of Motilal Oswal Asset Management and Dr. C.K. Narayan of Growth Avenues are our guests on Taking Stock this week. Gentlemen, thank you for joining us. Manish, I want to start off with you. 9 out of 10 experts that we spoke to in the week gone by believe that, this is just a minor dip in a bull market, and every opportunity that you get, you should use to go and buy good quality names. So, as of now, there is no panic or no fear in the market just yet. Would you concur with that view?
There is panic in the high beta without fundamental stocks. There's no doubt about it, because from the peak the stock prices have corrected anywhere between 20 and 50%, or maybe 45%. But I don't think there is any panic in the quality names. In fact, everybody is looking forward to, or most of them are looking forward to buying quality names at lower prices. So it would stay that way. I think the fall is attributed to geopolitical tensions, but it could also be technical in nature, and I believe the chartists are following a gap between 7100 and 7200, something of that kind, but I continue to remain positive and would be looking to buy on declines.
Okay, so let's get a chartist opinion as well. Dr. C.K. Narayan is also with us. So, C.K., what's your call? Do you think it's a dip that should be bought, or would you believe that it's just a teaser and much more is left in terms of correction?
See, I think this phenomenon of buying dips would largely remain confined to larger players like asset management companies, mutual funds, and really large HNI sets. If you look at the trader set, they all say that we should buy dips, but who's got the guts to buy dips when it happens? Like today, if you had asked anybody to buy one lot of anything, I don't think anybody had the courage to buy even into one lot of something which had dropped down for 5%. So this buy the dips thing is actually nonsense as far as traders are concerned. And it is true only for the larger players because they are the ones working with a strategy in the market, whereas traders are all seat of the pants, fly-by-night variety. And so saying buy the dips is only for those who have planned out something, and I think very few people would really have planned out the way they trade, but I think the institutions succeed because they plan out and have a strategy. So it really depends upon who you are addressing with the buy the dips. You can get all sorts of levels. Every, any technical analyst worth his salt will give you 15 levels to buy below. But buying dips is really a function of a strategy and a well laid out plan rather than a function of the levels or the state of the market.
Well, that point is taken. Actually, it's very easy to sit here and say buy the dips, but when the time actually comes, there's a bit of caution that one exercises. But Manish, you know, just from a long-term investor point of view, you were saying that it's still good to buy many of the good quality names. In the week on buy, actually, we saw names like PNB, Axis Bank, L&T, all correct about a 4 to 5%. In fact, since the start of the month, there's been about a 4 to 8% correction in these names. What are the stocks that you would look at now that one could buy into?
So the names that you mentioned corrected for good reasons. You know, L&T disappointed with the numbers. I don't think there was anything wrong with Axis Bank except for that valuation had become slightly pricey. I think it's time that one should stick to the plan, as Dr. Narayan said. We are looking into buying the ITs and the pharmas of the world, and obviously the environment is quite conducive for defensives, so to speak, and we have always stuck to our strategy of buying into the export-related themes. I don't even think that the consumer sector has done badly in terms of numbers. If you look at a Marico, if you look at an ITC, they have all delivered on fundamentals. You know, some of these names are already a part of our portfolio. And apart from that, you know, the banks, the private sector banks, the good ones, if they correct, we are looking to buy into them as well. And in fact, I thought even State Bank of India numbers were quite decent.